please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. You're watching MIDCAP Radar. I'm Samira Abdi, and with me is my colleague Reema Tendulkar. Hi, Reema. Good afternoon. Well, for the market, it's pretty good going, actually. I must say we're pretty close to the high point of the day. Just come off a tad from there, but nevertheless, it's about 150 points higher on the Sensex right now. The MIDCAP index is underperforming, but that too is off of its lows. Hi, Reema.
Hi, Samira. Afternoon to all our viewers as well. It's the contribution of the heavyweights which is lifting the benchmark indices. So take a look at the intraday chart of Reliance Industries, ITC, HUL, sharp up move in all these three. In fact, you could add even a Larsen and Toubro to that list in the last 30 minutes, and that's pushed the Nifty and the Sensex to the high point of the day. Some pickup seen in a couple of the Asian markets. So Hang Seng was trading practically flat as it started trade, and now it's higher by more than about 100 odd points. Straight away then to the market technicals, Ashwani Gujral joins in. Ashwani inching high as we speak. Now it's up more than 150 points in the Sensex. The Nifty's crossed that 10,070 mark. How do you reckon the last 2 hours of trade will be?
See, it's basically large caps which are leading the market, and that's always a good sign. So Reliance, HDFC Bank, HUL, etc., they are moving higher. And in the morning, possibly a few people went short on the market considering the crude and the rupee, etc. That hasn't worked out too well. So my sense would be that going into the close, there could be some short covering which could happen from here. But if you entered in the morning, I think as we go into the close, taking profits will also be a good idea, because you're sitting on several days of gains, and this can't last too long. So maybe today, tomorrow, chances are the market will get into some sort of profit booking as well. But for the next couple of hours, it should be okay. As far as individual stocks are concerned, HUL is a buy with a stop of 1480, target of 1540. Tata Elxsi is a buy with a stop of 1180, target of 1240. And ICICI Pru is a buy with a stop of 446, target of 470.
All right, Ashwani, thanks very much for joining in with your afternoon trade. Some news flow coming through that JP Associates has submitted about 100 crore rupees with the Supreme Court registry. So that coming in from the wires there. But let's focus on another stock. That's Arvind. They reported a strong quarter this time around, led by a good improvement in the branded apparels business. Mangalam is here with the highlights. Mangalam.
Absolutely, Sumera. So the stock is at the high point of the day. The street is rejoicing. A good set of numbers. So the best part about the company's fourth quarter performance was the performance that we saw in their branded apparels business. So on a consolidated basis, the revenues, they grew about 17%. The EBITDA grew much ahead of the revenue growth, so we saw a margin expansion, and the net profit grew by 18%. The net profit grew slower than EBITDA, primarily because the company's finance costs increased year on year, as well as the effective tax rate was higher. So let's talk about a couple of segments then. The textiles business, there the revenue grew 9%. The margins came off. That was understandably so, given cotton prices had increased. And now to the best segment performance, we got it from the branded apparels business. Out there, the company posted a revenue growth of 27.5%. We were working with a number of 24-25%, so there was a beat there. And the EBIT, that one grew by 252%. So we were working with an EBIT loss, or perhaps similar sort of EBIT run rate that the company has been posting quarter on quarter. But a 50 crore EBIT is something that the street likes. 4.5% margins. Out there, we need to see whether the company goes ahead and sustains this, and what caused this growth. Was it pullback of investments in this business, or was it the organic growth in their power brands? So that is one thing we'll watch out for. Engineering business, which is likely to be demerged. In fact, the company has announced a demerger, and they are underway. The process is underway. Engineering business also reported a turnaround. The EBIT out there grew by 80%. Overall, a good set of numbers. We need to know what is the sustainable growth rate going forward. As of now, the street is rejoicing these numbers.
Yes, it's moved up 4.5% since the announcement of the numbers. The stock has underperformed since the start of the year. With this up move itself, the stock is still down close to about 2.5% year to date. So now perhaps it's trying to catch up on some of its underperformance. Sundaram Fasteners Q4 numbers, revenue growth at close to about 20%, but the profit growth has only come in at 8.5%. So we'll await the margin picture on that. Sundaram Fasteners stock will be up for you on your screen. I think it was down close to about 1% earlier. Now it's flattened out, inching into the green as we speak. We let the rates adjust. A stronger growth in the revenues compared to the profitability. Moving on to HEG, that's posted a blockbuster set of numbers this quarter, a strong surge in their operating profits, while the margins also saw a significant expansion. We spoke to Ravi Jhunjhunwala, the CMD of the company. Here's a slice of that conversation.
Our last quarter, we still had about 20 to 22% of sales which were done in those legacy orders. And going forward, this quarter and next quarter, it will be practically zero. It could be a couple of percentage here and there, but it is going to be practically zero now. So in the current quarter and the next couple of quarters, there'll be no legacy orders. So there'll be the price, average realization of our company is going to be higher than what we have seen in the last quarter. We have already done some debottlenecking in the last 2-3 months, and our capacity utilization in the last quarter was about 84%, whereas the whole year average was about 80%. And in the current year, we are expecting this to be in the high 80s. I would not say it would be 90, 92, but it will surely be in the high 80s, so which is going to be about 8, 9, 10% higher than current year.
All right, so that's the word from the management of HEG. Let's now focus on Strides for a tad. Actually, stock has had a rough year since Jan. In fact, it looks like the stock has found almost no takers. The company, though, now has announced that they will merge their Australian business with Canadian pharma company Apotex. Ekta is here to tell us what this means for the stock and investors. Ekta.
Well, it's actually an interesting development coming in for Strides, Shasun, because it seems as though they are going full throttle in terms of building the Australian business that they have. So the news is that the Strides, as well as the Canadian pharmaceutical company Apotex, is going to merge. They're going to merge the Australian business. Strides is going to have controlling stake in the business, and the transaction, as per the press release, is expected to be EPS accretive from year one. Now, Strides, remember, runs its Australian business under the brand Arrow, and both of these companies will have the largest portfolio of owned product intellectual property for Australia. They will continue to run the businesses independently under the brand Arrow for Strides and under the brand Apotex. Now, the structure is going to be via share swap. The corporate structure will be announced as per the company on closing, and the hospital business will be retained by Apotex, which is not going to be a part of the merger. Now, just to put it into perspective, what exactly is the Australian business for Strides? Remember, the regulated markets for Strides, which is basically Australia as well as the US, is around 78% of their total sales, whereas Australia is around 25% of their sales. With this deal, it is expected to probably go on 50% of the total top line for the company. Remember, Australia and Q3 saw high single-digit growth rate on the organic front. They launched around 9 products in Q3 FY18, and year-to-date, they've launched around 23 products. Australia has a different model in terms of distribution. So the distribution model equals to the company having 1,200 frontline services in pharmacies as opposed to around 1,000 earlier. So there has been an incremental increase. Also, the company is looking to backward integrate their operations in Australia. Lastly, this is not their first foray inorganically when it comes to the Australian business. As early as August of 2017, they had acquired another company, Amneal Pharma's Austrian business, for around 86 odd crores. So it seems as though they're really building that portfolio.
Okay, thank you, Ekta, for that. Moving on, China's largest truck maker, Beike Photon, has shelved its plans to invest in India. They had committed an investment of 2,000 crore rupees in Maharashtra. They had purchased land for the same. Utkarsh Chaturvedi now picks up that they're pulling the plug. Utkarsh?
So Nisha, I'll take you back from when the investment happened. This promise was happened, the MOU was signed back in 2011. If you look at 2011, that was the point of time when the Indian commercial vehicle story was really building up. In fact, 2012, 2013 was one of the best years till this date in the Indian commercial vehicle industry. But then in 2014-15, we saw a dip, and that was the point of time there was immense overcapacity in the market. That is the point of time BK Photon thought of not going ahead with the commercial vehicle plan. Then they changed their plans and thought they'll get into pickup trucks, they'll get into vans and jeeps. But that also didn't work out for a long time. In fact, till last year, BK Photon then again changed their plans and thought of getting their German brand, which is owned by them, called Bodward, into the passenger vehicle segment. But at this point of time, if you really look at the way commercial vehicle industry is, also the passenger vehicle industry, there's still a lot of competition. And they really thought that it is better for them to really stay away from the Indian market at this point of time. And finally, they have gone ahead. They're pulling out investment also will be picking up, is that they have put that land on sale as well.
All right, important day in terms of mid-cap earnings. We had numbers coming in from Arvind, but later today numbers will be out from Federal Bank, Jubilant Life, Oriental Bank of Commerce, Magma FinCorp, Parag Milk Foods, amongst many others. Let's drill it down to Federal Bank and find out what the street expectation is from that. Abhishek Kothari joins in for that. Abhishek?
Well, Rima, Street is anticipating a muted quarter or the lowest earning estimate for Federal Bank in this quarter. To run through what to watch out for, slippages below 300 crore will be positive. Typical range for Federal Bank has been between 250 to 300 crore. Last quarter, it was at an elevated level at 412 crore. The net interest margin, which was at 3.33%, anything above 3.3% will be positive. We have seen low-cost deposit aiding private banks in terms of the cost of funds. So low-cost deposit in the previous quarter for Federal Bank was at 33%. The loan growth is expected to be above 25%. Last quarter, it was at 22%. And the asset quality, that is the gross NPA, below 2.5% will be positive. Last quarter, it was at 2.52%. Our polls suggest an NII growth of close to 16%, while net profit to grow at 10.5%. Back to you.
All right, Abhishek, thanks for that. So Federal Bank expect a muted quarter, but JSPL is going to come out all guns blazing today. Nigel, how many quarters of losses has it been for JSPL, and what's going to lead the turnaround this time?
Well, Sumaira, after nearly 13 quarters, JSPL is going to deliver a profit. So all guns blazing, they're going to come all out, really. This quarter is going to look very, very good. And quarter one also is looking quite good. But let's talk about quarter four first. Our poll threw up a number, growth of around 28-29% approximately in terms of the top line. Margin should be more or less steady. And as I said, watch out for a net profit this time around that compares with a loss. What's really going to drive the performance? The steel business. That's looked very, very good. Remember, ramp up of the Angul facility, that's what's going to help them. The power business is not going to do great, while the Oman facility is going to look absolutely stellar. We already have the sales volumes numbers with us, 1.18 million tons, which is really a very good performance. So there's a sharp growth on a year-on-year basis. As I said, the Angul facility came on stream and that has been ramping up. So that explains why, in fact, we'll see higher steel volumes. JSPL, remember, they sell more amount of long products, and long product prices have gone through the roof. They're up nearly around 15 to around 20% on a sequential basis. So that's what will help them. And even pellet prices, I remember just a few quarters back, no one wanted pellets. In the last 1 year, the demand for pellets has really come back, and the pellet prices as well have moved up. Put all of that together, and that's what's going to help them. Input costs have gone up, but realizations will more than offset that input cost. That's why EBITDA per ton should expand by roughly around 1,000 rupees. Moving to the power business, that's going to be not great at all. The EBITDA number is going to come down sharply. The number of units that were sold as well will come down drastically. So that's not going to be a great point for their numbers. And finally, the Oman business, last quarter they did around $60 million odd. We're counting on them repeating that performance. Remember, for JSPL, the operating profit will be good. Bulk of the operating profit gets eaten away by higher interest costs. We'll keep an eye out on those set of numbers. I think in the next couple of hours, it should be here. I hope at least. Back to you.
All right, Nigel, thank you very much for that. On that capacity utilization at Angul, we had spoken to the management just last month, and they indicated that they're targeting 85% capacity utilization for their Angul plant in the next 3 to 4 months. Stock up 30% in 2018, 130% in the last 1 year. But HPCL is having quite a rough day. That's after oil prices rise, stopped at $76 per barrel mark after US has withdrawn from the 2015 Iran nuclear deal. We spoke to M.K. Surana, the CMD of the company. Listen in.
The prices are not fundamentally sustainable at this level, and this level of price is more because of the high amount of speculation and the geopolitical situation, also added by Venezuelan issue and instability in oil production in Libya. Strategic reserves, which has been created, they do provide a little bit of cushion in between to store certain part of oil. The earlier sanctions, India has devised certain mechanisms where the Iranian oil was coming to India, and there was some payment mechanism which was worked out. The European Union seem to be more concerned about it because their bilateral trade with Iran has almost tripled now after 2015 or so. So they are definitely interested in having some sort of diplomatic solution to the whole thing.
The market, it's status quo actually with the gain of about 150 points odd for the Sensex. But let's get into market opinion then. This morning we caught up with Pramod Gubi of Ambit Capital. So let's hear him out and what he likes about the market and what his view is on the outlook.
We've been quite positive on the sector. Of course, valuations aren't that attractive as they used to be about, say, 12 months ago. But clearly, a lot of things are stacking up for the sector in general, but particularly for some companies which have made ahead of the curve investments into what is broadly called digital at a time when IT spends, particularly in the West and in the US, are picking up, and you have a tailwind in the form of currency. So to that extent, you'll have many legs of earnings growth for the IT sector. Given global growth situation, which is fairly benign and strong across both developed and emerging markets, commodities in general should do well. Yes, again, perhaps we are in the late stage of that cycle. So commodity stocks, metal stocks in general should be a straightforward play on those commodity prices, and we continue to be positive on that. I think rural consumption should see disproportionate pickup in growth and flowing down to earnings as well. So yeah, I mean, I guess we are quite positive on consumption. Valuations aside, visibility of growth, clearly that's one sector which stacks up.
All right, let's also get in. We spoke to M&M earlier today, and he's one of the top corporate voices. So in an exclusive conversation with Ronojoy Banerjee, Pawan Goenka, the MD of the company, said that FY19 will be one of the best years for the company in a long time.
On the commercial vehicle side, FY19 probably will be one of the best years that we have seen in a long time. And the reason for that is that industry has started recovering last year. There's still a lot of pent-up demand that is happening, but the big factor will be that there is a concern about increase in prices of trucks and light commercial vehicles post BS6. And therefore, there will be a lot of replacement of fleet that will happen in FY19 and FY20, leading up to 1st April 2020. And therefore, I think there will be a very high growth. We would still see a growth higher than what we have seen last year, which itself was not a bad growth at all. We had about I think 20% growth overall for commercial vehicle, and I think this year we would match that or maybe even exceed that. Double-digit growth for passenger vehicles should happen this year. Last year we were at about 8% for passenger vehicle. This time I am expecting to cross 10%. Subject to 3 or 4 things not becoming a derailer. Monsoon, as predicted, should be normal. Interest rate should not go up more than 25, say 50 basis point. Up to that point should not hurt the industry much. Commodity prices, we are looking at about 2% rise in commodity prices. If we remain about there, we are okay. Oil prices, 70, 75 is okay. If it goes beyond that, could become a problem. So basically, these are things that one has to watch for. Provided none of these become derailers, I do see a very good possibility of more than 10% growth in the passenger vehicle side.